We may be experiencing blatant market manipulation with AMC stock. Ladies and gentlemen, the short interest has apparently just fallen about 5% at the same time AMC stock has been going straight down. What's happening here? What's most likely occurring? And what do you need to know about this recent development? Ladies and gentlemen, let's get straight into it. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. So, first things first, AMC stock down 3.79% here today. That doesn't even matter. Let's get into the Ortex data and what is being said apparently on AMC stock. If we go ahead and give this a quick refresher, the estimated short interest of free float just fell off of a cliff from 25% to just under 21%. What's going on here? Well, if we take a look at the official reports, which was released yesterday, for the settlement date of May 15th, the short interest of free float was 20.51%. with 106 million shares sold short. This means that they're saying shorts covered 29 million shares of AMC stock in this 2-week time period from April 28th to May 15th. Well, if we take a look at this time period, April 28th, AMC stock closed at $5.50 per share. You did move up to $6 per share. Volume did move up a little bit, but what we have seen since then in the same reported time period is the stock fall from $6 per share to $4.69 per share at the time of recording this video. Now, how is this happening? How could this happen? Well, it's possible that shorts did cover. Now, is this probable? Not at all. Just based off of pure price action of AMC stock. You have had a massive wave of shorting AMC as of recently, but what has really changed here that I find most notable is shorts are not shorting the stock in the same way that they have in the past. They're actually going out and they are buying deep in the money put options, which are forcing market makers to go out and short the stock. So it's kind of switched to some degree. As we reported in the last video, the short interest of AMC is really closer to about 37 to 38%. That is including the puts that are deep in the money that have likely been hedged for by market makers. Short interest is a lot higher than what you are seeing on the Ortex platform. Now, if shorts didn't really cover on their short positions, or if maybe not all 29 million shares were covered that, we are getting reported on, they could be using those same option strategies that they are using now to make it look like they did cover on their short positions. Hedge funds can go out and buy some calls and make it look like and report that they did cover on their short positions. After all, who is really looking into these hedge funds? Who is, holding anyone accountable? The government's not. I mean, nobody is. So I think you got a good mix of both going on here. I think it's possible in this couple day run up after April 28th, where AMC went from $5.50 to over $6 per share. I think it's possible some shorts did cover. But I think it's more probable that they're using the options to make it look like and report that they did cover on their short positions. Now, if shorts did cover, let's just entertain that thought here for a second. If shorts did cover in the way that the data looks like that we are getting reported on, that would be very bullish for AMC. Very, very bullish. Why would that be bullish? Well, we're heading into a catalyst any time now, which is the court date and a new update from the courts, in which Some people expect AMC stock to fall 70, 80, 85, 90% from here with obviously the dilution. It's not necessarily the time that shorts would cover on short positions if they still had that ultra bearish stance on AMC stock. 50 cents, that's not something to, freak out about if you are a short seller, right? So if you really did see this many shorts close out their short positions, that either means maybe, however, would be possible that they actually did cover on their short positions. Most likely would mean they're either using the options to make it look like they covered on their short positions, or they are just no longer bearish on AMC. That the situation with AMC has gotten so much more bullish that shorts don't want to be a part of it anymore, which I think is a very bullish thing. If shorts did cover, like let's be 100% honest with ourselves. If shorts did cover and all of this data is legal, that is very bullish. That is ultra bullish heading into potentially the next core update, because that means maybe someone somewhere knows something that is bullish for AMC, but the bearishness would, be starting to go away. And after all, the court date and the next core update is going to be the biggest driver of AMC. So if, again, shorts are not as bearish anymore, then maybe we're going to get a very positive update from the courts. Because in my mind, again, 50 cents from $5.50 per share to $6 per share really doesn't make that big of a difference in your short position. Like, that's not like a make it or break it kind of short squeeze here. This is much smaller than we've seen in the past with AMC, and you didn't see as many shorts covering. Now, fundamentals starting to turn around. The only thing you could really say that is bearish for AMC is they have this upcoming potential dilution from the courts. Maybe not now. Really hard to tell. You could really make a very bullish case for AMC if shorts did cover, and not a lot of them covered. Let's be real here. There's still over 100 million shares currently sold short. If you factor in the options here, there's another roughly 50 to 60 million shares that are sold short by market makers. There's still a lot of short interest. Let's not be confused there. But if you did see 29 million shares cover, the short interest go from 25 to 20%, I would be very bullish on that. And really, it's a bullish stance on the next bit of news or catalyst we get for AMC stock. Now, let's run through the rest of this data. Take a look at the option activity that we are seeing here on the day. No surpriser, you're seeing another July 21st $10 put worth $3 million. It would be very interesting to see if somehow they could use these deep in the money puts to report that they did cover on their short positions. Or are they just exchanging, right? Maybe they did cover on the shares, but they're now shorting using the options. That's a possibility as well. Maybe they just flip-flopped and switched assets that they're using or tools that they are using to short AMC. Nonetheless, you have seen two orders on the day from institutional investors that are interesting that the tracker actually picked up on, totaling $3.21 million with a positive order value of 0%. Again, taking a look at the short interest at 20.89%, $526.41 million worth of short positions on AMC stock. Also pretty interesting, the short score went from 89 to 90 today. So looking, more prone to see a short squeeze according to Ortex. You do have 172.52 million shares that are currently out on loan. This is also interesting because how's the short interest falling like this, but the shares out on loan are not? Weird. Days to cover is also rising as the volume has been lower as of recently with AMC stock. Cost to borrow trailing 3 months, 58.32%. You're also looking at 100% share utilization. If we take a look at Interactive Brokers, you got about 50% cost to borrow fees with about 1 million shares currently available to be lent out. 108.29 million shares estimated to currently be sold short. Cost to borrow average 71.5%. Cost to borrow max 109%. Cost to borrow minimum 55.4%. So you're looking at some pretty decent numbers over here. And again, Ortex thinks AMC is more squeezable right now than it was yesterday or really weeks or months ago. This is the highest short score that AMC has had in a very long time. Now, let's go ahead and take a look at the Stock O Tracker data here as well. Maybe I don't have to say this, but I'm going to say it anyways. They're using the options to short AMC, so there's a lot of bearish options on AMC. For this Friday, for May 26th, you are looking at 4,500 calls in the money, 101,000 calls that are out of the money. In the money puts at 55,000, out the money puts at 38,000. If you take a look at next week, 1,600 calls in the money, 52,000 calls out the money, 16,000 puts in the money, and 22,000 puts out the money. This is really the June 2nd and June 9th expirations. That's where you're seeing more retail dominance. You're not seeing as much institutional shorting with the options. There's more calls on those expirations than puts by about a 2-to-1 kind of average. Now, June 16th, that's where things really start to ramp up, and you see a lot of that bearish institutional option activity. You got 339,000 puts that are currently in the money, 490,000 puts that are out of the money. For June 16th on the call side, 3,500 calls in the money, 448,000 calls that are out of the money. So a lot of option activity for June 16th as well as for July 21st. Now, if we go ahead and take a look now at the market breadth of the day today and a quick look at how the markets are doing. Markets are up a lot today. As far as the NASDAQ, up 1.75%. Russell 2000 is down 0.81%. So you're not seeing a broad-based rally here. Most stocks are down on the day. The NASDAQ really outperforming, S&P outperforming as well, because large mega cap tech is the dominant sectors in both of those indexes. And Nvidia earnings just ripped all expectations to shreds. The highest analyst estimate for next quarter's guidance for their next quarter earnings was about $7.15 billion. Nvidia says they're going to make $11 billion next quarter. Nobody expected that. So Nvidia is now the single biggest earnings in all of history. They have added more market cap than any other company has ever done upon earnings. It's over $200 billion that has been gained to Nvidia's market cap. Nvidia is now almost a $1 trillion company. We'll see if they close out the day as a $1 trillion company. Now, there is also bearish things that are continuing to add to this market. Fitch rating agency puts the United States AAA credit rating on watch. S&P Global, they did downgrade the U.S. credit rating in 2011 on August 5th because the debt ceiling negotiations really came down to the wire. It's looking like Fitch will also downgrade America as well. Last time we got a downgrade, the S&P dropped 6.5% the next day after that downgrade. And that was without a default. That was America coming to an agreement on the debt ceiling. So you still have a lot of bearish pressures that are at play here, not to mention what kind of spending cuts we see from the actual debt ceiling itself. Those could come back to haunt the markets. But for right now, the AI bubble is still fully intact and stronger than ever, apparently, which is out of this world. If Nvidia can actually come through on their next quarter guidance, that's just gonna be insane, okay? And just let me put this out here. If you're buying Nvidia right now, hopefully it's just for a trade, because Nvidia is grossly overvalued and pricing in a lot of growth in the long term. So you really have high expectations there. So just be a little bit careful. Now, if we go ahead and look at the charts for AMC stock, AMC is down 3.90% here today. at $4.68.5. You are under the demand zone of $4.80 per share. Really, $4.80 per share to $5 per share. It was the big demand zone. You could see yesterday the low was $4.80 per share. You bounced right off of that demand zone. Maybe shorts are reloading on their short positions. Maybe it's just the fact that breadth is terrible today, with most stocks declining by quite a bit today, whereas other indexes, like I said, the NASDAQ are going higher. Most stocks are going lower. Maybe you're just seeing this short everything by big tech. Maybe that's what is truly going on today. Maybe that is what is causing AMC to fall. I think it's probably a mix of all of these things that was said here in this video. Now, as far as AMC on a technical basis, you want to watch this previous low that we did set back here on April 24th. If you bounce from that low, which would be $4.64 per share, that's a good place to start. That's about 5 cents lower than where we currently are. Last time you hit this low, you did bounce almost immediately back up to that $5 range. So a quick drop to a bounce could be likely here, and that could be in the cards for AMC stock. If you don't, then I think you trade sideways in this range for a while. The lowest point that I would watch in the near term, $4.32 per share. Obviously, if the credit rating agency Fitch downgrades America, things could get a little bit choppy here. But all in all, I'm still watching for that collateral crisis to hit the markets once AI does roll over. This did kick the can down the road, though, because, AI is seeing an impressive rally here today. Even something like Microsoft up 3.5% today. Who knows when that comes to an end, but when it does, it's going to be very aggressive. And if it's mixed with a positive catalyst for AMC, that's going to be a recipe for a short squeeze with AMC stock, guys. So that is going to do it here in this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys do want to come trade with me live in real time, link down below in the description of this video as well. You guys have a great rest of your day, and I will see you in the next one.